The world's slowly but surely changing since 2020 with the start of COVID-19, and the year 2022 has been challenging for everyone. So what has changed and still changing in the past 2 years? How is it related to cryptocurrencies and how did it affect the economy over the past 2 years? Hello friends and welcome to the Coin Engineer YouTube channel. Before we start, don't forget to subscribe to our channel, turn on the notifications and follow our other social media accounts to keep up with our latest videos and upcoming events. Now, let's get started. The coronavirus started in China in late 2019 and spread across continents because of the lack of communication, safety protocols, and awareness. Essentially, it caused the death of over 5 million people and caused the global economy to have a massive impact during the lockdown period. Lots of small and big businesses went bankrupt within the first 6 months. The economy lives and grows on production, which requires demand, labor, and capital. But because of the lockdowns, industries couldn't provide enough supply for the global market. Due to the lockdown, supply and demand for daily use goods and services fell drastically. At first, you did not realize the market prices because the countries used the goods in their stocks until nothing was left. For example, let's start with the oil industry. From the beginning of January 2020 till the end of April 2020, the oil price per gallon fell by about 72.5%, mainly because there was no usage of aviation, public transportation, or personal vehicles. The fall in oil prices and decrease in demand for oil products in international markets resulted in a loss in revenue for countries dependent on oil and created an adverse economy. Almost every industry had a similar impact between 2020 and 2021. By the beginning of March 2020, the market for short-term funds and US dollar funds demonstrated stress signals. In the upcoming weeks, the US Treasury market, which is a very liquid financial market, displayed a lack of liquidity. Central banks reacted immediately to adopt the same measures applied during the financial crisis. US Federal Reserve and other central banks dealt with funding market loss within days to prevent panic in the funding market from creating market-wide disturbances. However, all these actions caused more panic in the markets and investors. Shortly after, the government started to borrow US dollars or print more of their money, which led countries to lose the value of their national currencies against the US dollar. When the lockdown ended, the demand started to increase once again. However, this time there was not enough supply. And if there is not enough supply, then there is inflation. Inflation in the long term is a good thing for the economy. It indicates that the economy is growing. However, rapid inflation means a shortage of goods and services. You can think of the recent global energy crisis as an example. Inflation can happen for many reasons. For example, the Federal Reserve may decide to decrease the interest rate. Maybe the money supply increased too rapidly, or the cost of production increased, or there is not enough supply of goods and services. It is why the Federal Reserve raised the interest rates almost every month for the past year. And just like the fiat currencies, this situation affected cryptocurrencies as well. Even if you are not interested in the world economy, you would at least hear once about the Federal Reserve because of Bitcoin. Bitcoin may be a decentralized digital currency, but it still connects to the global market in terms of financial value. Like any other asset in the market, Bitcoin is affected due to the recent war between Russia and Ukraine, increasing interest rates, the energy crisis, the pandemic, and much more. In addition, the recent scandals about Luna and FTX caused Bitcoin to lose almost 68% of its market value in 238 days. Ever-ending bankruptcies of crypto investment firms, centralized exchanges, and stablecoins caused Bitcoin to fall to $15,500, and most likely it will continue to fall to $10,000 in the upcoming month. Considering all that happened and still happening since 2020, we may be at the edge of a new recession. The latest studies and almost every historical market data show that 2023 might be worse than 2008 in economic terms. The 2008 financial crisis began with the cheap credit and lax lending standards that fueled the housing bubble called the mortgage crisis. When the bubble burst, banks were left holding trillions of dollars of worthless investments in subprime mortgages. Of course, this caused the Great Recession, which cost many their jobs, savings, and homes. The Great Recession was the sharp decline in economic activity during the late 2000s. It is considered the most significant downturn since the Great Depression. In a recession, unemployment tends to be high, wages low, and people can't afford to buy even lower-priced items because they do not have the purchasing power. And if the Federal Reserve continues to increase the interest rates at this acceleration, such action would mean even higher loan rates for consumers and businesses. It could also cause recessions in both the US and global economies. Higher US rates encourage investors to pull money from foreign markets and invest it in US assets for a higher return, a shift that can cause turmoil in overseas economies. Unless supply disruptions and labor market pressures subside, those interest rate increases could leave the global for inflation rate at about 5% in 2023. So what can we do? Here are some tips we can use to pass these days with minimal losses. Start changing your habits. It is vital to have enough money set aside so you can still pay your monthly bills in the event of an unexpected job loss or another emergency. Your monthly budget is an excellent place to start because you can see how much money you spend on each month and on what. For example, you can make a balance sheet for your monthly expenses to see how much money you spend on necessary things. Your goal should be to have an emergency fund to cover midterm spending, and that can be anything. You may need to change the oil of your car or something else. Stop using your credit card and start minimizing your debt as much as possible, as fast as possible. Credit cards already have high interest rates, but as the Federal Reserve continues to raise the interest rates to reduce inflation, these rates will become even more costly. I know many people who are paying debts as far as I met them. Don't be like those people. Avoid borrowing credit from banks. If you can't afford to pay, then don't borrow it. Have a backup plan for new jobs. You may have to update your CV and start looking for a new job. In times of recession, companies and other businesses tend to decrease their labor force to minimize operating costs. Remember that no person or firm is indispensable, so this may be a good time for you to learn new skills that will provide extra income. Invest wisely. Market movements can be irresistible, and you may want to enter short or long positions in Bitcoin or other cryptocurrencies. Especially if you're a new investor, you would love to see the market prices for almost every asset become lower than you could ever imagine. Before you do any of that, you should start watching our Bitcoin from scratch and futures market tutorials, where you can learn everything about investing in cryptocurrencies. Don't forget to drop a like under this video and subscribe to our channels to keep up with upcoming events. Thank you for watching and take care until next time.